Hello, everyone, and welcome to another episode of Flipping Out. My name is Paul Lizell. I'm your host, and today I'm super excited about my guest here because I've been talking for years about the convergence of real estate and cryptos and blockchain technology. And we are on the precipice of that right now. We have a lot of different companies out there that are doing things in both. And Hunter Albright, who's my guest here, is going to be talking a lot about that. He is with Salt Lending. He's been in the TradFi space, traditional finance, and is now into the crypto DeFi space. So we're going to deep dive in a lot of stuff. Hunter, thank you for coming on. I appreciate your time.
Oh, Paul, it's a pleasure being here. Looking forward to it.
So let's talk a little bit about your background first. We talked a little bit off air here on that. Just give us a little bit of background from what got you started into cryptos.
Yeah, I mean it's a combination of both my technical background as well as then having spent several decades in traditional finance. I started my first company when I was a senior in college and was partnering up with a professor to build a software company. And so that kept me in school to end up getting a PhD in systems engineering with a focus on AI at the time. So doing a lot of neural networks and a lot of optimization. And I got into finance through that route. So I was building predictive models to do underwriting, to do pricing models, to do marketing models. At the time in the US, regional banks were looking to go national. And so I spent several years in the US and then I went overseas and spent over 10 years in Europe leading large credit card companies and personal loan portfolios, as well as doing a lot of work with MasterCard and Visa on the payment systems. And then when I came back to the US, I spent more time in technology, but I ultimately got pulled into crypto because my understanding of sort of payment systems, financial, retail, banking, as well as then the technology. And so I started to teach it. Launched the first blockchain and Bitcoin course at the University of Colorado. So I've got all in to start to learn, to educate people about it. And that's sort of just continued sort of my dive down the rabbit hole about getting excited about the technology and what the potential is.
Yeah, I mean, the potential is just massive. You said so many things. I want me to go into so many different directions, but I'll try to keep focus here and get into what's kind of relevant right now and where we are heading. Because Bitcoin obviously was the one that really pulled us in, right? And that is the grandfather of all the cryptos out there, and has the best use case for at least digital gold, if not others. I do think digital gold is kind of where it is. People want to buy it and keep it, let it grow, and then be able to potentially borrow against it, which we will talk about that with Salt Lending. But stablecoins, we talked about this too. Stablecoins are going to be the biggest, I think, the quickest bridge from TradFi to DeFi, right? Going to stablecoins and the bank's ability to potentially custody these as well. Because look, I mean, the biggest issue for me for cryptos for years has always been it's hard for our parents, our grandparents to do this because they're scared about holding it in their cold storage wallet, their wallet, or their ledger wallet, right? That brings a lot of angst to people. And I get it when I'm transferring Bitcoins, multiple Bitcoins from one location to another. That's really scary. It's why I always do a little test before I do it. So this is going to kind of bridge that gap, I think, right? Especially with banks being able to custody cryptos now. I think that's going to really bridge the gap from the older generation and make it a little simpler for people like us. We were okay with doing it the way it was now, right? And we probably prefer that because we like no third party intermediary, right? Which is what Bitcoin offers, which is so great. No third party intermediary. What are your thoughts on that?
Yeah, I'd agree. A couple of things. First, in terms of the on-ramping of people into digital asset world, I completely agree with you that I think stable coins will be a great way to introduce people to the concept of wallets and keys and initiating sort of payment through those mechanisms, which is different than the way we sort of manage our money and make payments today. I think secondly, stable coins also will help people understand some of the custodial models that I think are going to exist as we migrate from TradFi purely to DeFi, because there's going to be a range of people depending on both their financial sort of literacy as well as their technical literacy. They're going to need help along the way, and that's one of the things that we do at Salt Lending is really say, look, people want some help. They have a lot of assets, but they want sort of somebody sort of hold it, not necessarily holding their hand, but at least partnering with them on sort of high consequential transactions to understand what to do with it. So you're to go forward. So I think the stablecoin will be sort of a real enabler to getting people into it. And as they learn more about then the digital assets, they can figure out where they want to go next with it and what they want to learn more about and potentially invest in.
Yeah, I mean, stable coins are going to stay at $1. It's like a money market, right? So there's less risk with that, and it gives you time to get. It allows it to be easier to get in and out of other cryptos if you want to with stable coins for
And you
sure.
still are going to need it to sort of interact on a day-to-day basis. I think we're, we'll talk probably more about it regarding Bitcoin. I think it's not necessarily going to be a means of payment for
Right.
everyday items. And so people will need a way of living their life, even if they're trying to live on a Bitcoin standard, which will include sort of other tokens, other digital assets to enable them to do that.
Yeah, no doubt about it. I mean, Bitcoin is slow and clunky compared to some of the other ones out there to be used, right?
Yeah.
What are your thoughts on, because it's kind of working with the banking system in a way, XRP and XLM? What are your thoughts on those and what their future holds?
So I'm definitely not an expert in those. I think there will be, I believe that there are going to be different currencies for different purposes, and people are going to start to think of them and they will evolve into their own ecosystems. If you go back and you look at the history of money, there was a time, especially in the US, where we had sort of over 4,000 different currencies that were really enabled for different use cases and different purposes. I think that that's one of the things that we probably don't know where the answer is going to end up because of the power of smart contracts and the power of sort of digital assets to be tailored to those different use cases. I think it's going to be really intriguing to see how that develops because, especially with the advancements of AI, all of the machine to machine transactions and payments and things of that nature where, we're going to see a lot more things be automated. I mean, even if we think about some of the fun scenarios in real estate, I have seen where they are using drones to do more pressure washing of commercial properties. And so, right, you can imagine that as a drone would get automatically paid. It would go then clean a building. You could have sort of another drone inspect in terms of the quality, and then sort of certify the transaction. And there's a lot of those potential technologies in terms of maintenance of assets of sort of items that are going to be potential and people aren't going to want to pay that with Bitcoin. They may not even want to pay that with Ethereum. They may want to have something completely different that is used for that sort of cash account or that budget account, if you will, from a maintenance perspective.
Yeah, I mean, you do have really quick transactional ones based like Litecoin, which is made to be quicker, right? And even something as simple as Digibyte, right, which really doesn't have much of a use case right now at all, but is really quick. That could potentially be used as kind of like that monetary thing too. And it's one of those things where you have all these in your wallet, and say you want to go to the coffee shop down the road, you convert some to stable coin, as you were saying, right? And you pay with the stable coin. That's probably the best use case, right? My wallet's getting low, just kind of like your Dunkin' Donuts wallet, right? You got to auto reload. It's going to be no different. And you can auto reload like at whatever price that Bitcoin happens to be at that point into your stable coin, go to the coffee shop, go have lunch, whatever, and pay for it that way. I think that's probably a pretty good use case for it with the
Yeah,
stable.
and it actually is, I think probably one of the things that a lot of people could relate to that would be a similar model is how we potentially leverage loyalty points today. Because you could buy and you could top up loyalty points to get a ticket on an airline. You could even sell your loyalty points. And so if you think about that, all the airlines almost essentially have their own digital currency in terms of their rewards programs. I think there's some models within that that sort of ecosystem that we'll learn from and figure out how to adapt other digital currencies as we go forward.
No, I would agree. Now let's talk a little bit, change subjects here a little bit about salt lending. Because you guys, unlike BlockFi, unlike Celsius, you guys have survived through that, right? I mean, they were
Yeah.
bad models, right? And you guys did it much better way, right? So when did salt lending first come about?
So Salt Lending was founded in 2016. And so, been at this for nearly a decade in terms of the Bitcoin backed and digital asset backed lending. And you're right. I mean, the winter of 2022 was really tough on the industry. both, not because of any compromise of technology, right? So the Bitcoin network has not been compromised. This was really fraudulent management.
Yeah.
So if we think about the Celsius, the BlockFis, and FTX, and what happened, but the industry has really taken a hit, and I would say it's really just been in the last 12 months from a lending perspective that the industry is starting to recover. We're seeing new entrants, which I think new entrants are great. I mean, people are going to want to have options for lending. All the different lenders provide different philosophies around custody, provide different philosophy around rates. But even if we are all the same, I think it's smart for people to be thinking about diversifying, who they work with, to sort of change the surface area of any counterparty risk, just as any of us would do with large amounts of investment capital with banks and other things. So it's good for the industry, I believe, as a whole, to help rebuild that trust, rebuild the reputation, and rebuild everybody's interest in the tools, because I think the tools are what is really important in terms of what the capability is that they are providing everybody.
Yeah, no, I completely agree. And it's very good to see that it's coming back as far as lending, because when you look at Bitcoin, with all the adoption, with the US government going to have a treasury of Bitcoin, with other countries, I'm sure doing the same, or El Salvador led the pack, right, back in the day. And they've done extremely well. And I was there last Thanksgiving for a week. Really, the amount of changes that are going on there and how they're using their money from Bitcoin that they made to do new infrastructure on their roads, fix the roads. The building that's going on at Bitcoin Beach right now is amazing. The future of El Salvador, as long as Bukele is still there, is very, very bright. And that's because of Bitcoin. But other countries have also adopted it. You have companies, obviously. Michael Saylor was the biggest one out there. Now he's cheerleading, getting more companies out there to make the Bitcoin treasuries as well. I think what that's going to do, instead of when you have these bear markets, instead of a 70 to 90% retracement in Bitcoin, which typically happens, you might have a 40 to 50% retracement. So it stabilizes the asset, I think, a bit more. Do you agree on that?
I think we are going to see the volatility start to squeeze out of, the sort of Bitcoin market as a whole, as one, more and more people are investing in it, buying in it. And two, as people are able to get liquidity out of the asset in other ways, like borrowing against it, there'll be less of a need to sell it. And I think we'll see the price, start to stabilize and tighten up over the next sort of 5+ years.
Yeah, no, I agree. It's heading to a good place down here in the future. As far as lending, my biggest, the reason I never did Celsius, the reason I never did BlockFi is because I always wanted self custody my cryptos, right? If I gave it to somebody else to custody, now there's risk, right? I no longer hold it. If you don't hold it, if you don't have your own keys, you don't own it technically, right? It's kind of like putting money in the bank. Technically, you're loaning money to the bank. You no longer own that. They have that, right? It's just an IOU we're getting. So it's similar there. I think, and I'm hoping that this can happen over the next 5 years or so. And I believe it could be done with smart contracts. And I believe there's multiple companies trying to do this right now. Persistence might be one of them, where they're doing smart contracts through the Bitcoin blockchain. Say I have it in my Trezor wallet or another cold storage wallet. If we can have a smart contract that locks up that Bitcoin, that I still technically hold it instead of another company holding it, such as you or some of these other companies out there. Do you think that's realistic, that that can happen in the next 5 years? So I can't move it, right? It's kind of locked on my Trezor somehow, or locked on even on yours, right? Do you think that's something that's a possibility, or is it wishful thinking?
No, I think, companies are out there trying to find that solution. And more importantly, they're trying to find a range of custody solutions that are going to meet people where they want to be at. And I do think they'll cost more, but as more capital comes into the Bitcoin market in terms of people's willingness to lend out against Bitcoin in different commercial structures, that will free up different custody models. A lot
Mhm.
of the constraint for a lot of companies to date has been that there hasn't been just a complete influx of dollars or fiat currency to lend out in a more unconstrained way, because people were uncertain of the asset class as a whole.
Totally.
So that really constrained where we could be as lenders and how flexible we could be on different custody models. Now at Salt, what we have done traditionally is doing pooled custody so that we could ensure and both protect the customer. And I can explain some of the technologies we use to protect the asset, but it does require that we take custody of the asset. Now we have a lot of things in place to provide the level of protection and security, and we do not rehypothecate. So when we
Okay.
take a customer's collateral on board, it is there to service the loan and no other purpose. And we're not trying to leverage it as like the BlockFis and the Celsius did in terms of
Smart.
leveraging it up, moving it onto, and doing things of that nature. So, and I think that's pretty consistent now across the industry as a whole. That has really changed in terms of, what people are trying to do. I often talk about like, we are definitely in a lending business. We are not in the Bitcoin acquisition business. Like there are lenders out there that have their liquidation threshold set where it is only a quasi lender as opposed to a Bitcoin acquisition strategy in terms of how fast they make margin calls, how fast they liquidate, and what those thresholds are. And, we are very much of the position like it's your Bitcoin. We want to make sure you keep it your Bitcoin. You have it as a long-term asset. Our goal is to have a really profitable and great business by providing you tools to get liquidity out of that Bitcoin, to manage it appropriately, and to be able to use it for other investment opportunities.
Yeah. No, I mean, since you guys are around since 2016 and you survived what I think is the most difficult market any crypto company would ever go through over the last, call it 8 years or so, I think you guys got staying power. Obviously, it showed me. And that's why I was happy to have you on because your company is one of the ones I've seen just be able to stay out there where so many other ones have just folded, right, over time. And talk a little bit about your lending on your Bitcoin, right? I know there's probably different LTVs, different rates compared to how much you're going to lend out of Bitcoin's 105 right now. So if I want 50% of my Bitcoin to be able to borrow against it, it's 52.5. What kind of rate am I looking at that? And what is the payback terms, time frame, all that?
Yeah. So a couple of things. Fundamentally, the biggest management of risk that a borrower can have is the LTV, is the loan to value ratio. At Salt, we lend up to a 70% LTV, but we also have people that have LTVs that are down at the 10%, 20%, 30% level because having that cushion really allows people to absorb drops in the market without even coming close to sort of liquidation what we would refer to as stabilization, which I'll explain here in a second. But that's really important. But it is, the great thing about digital asset backed borrowing is you don't need to have a credit score. And so if you want to buy a piece of real estate, if you want to get access to something, if you have the asset, you can get the cash.
It's a no doc mortgage,
Yeah,
technically, right?
exactly. If you have the asset, I also think that collateral backed lending is a much better tool than unsecured lending. So, and I come from sort of 20 plus years in unsecured lending, and a couple things for me that are really different compared to collateral backed, especially Bitcoin backed lending. One is you don't need a credit score compared to, the traditional unsecured lending you do, or even for mortgages, you need a credit score. Two, unsecured lending is basically printing money. It is a way that sort of new money is getting put into the economy. You are essentially taking an advance on your future earnings. And I think what has traditionally been showed is that people are often buying discretionary items. They're buying sort of luxury items, not necessarily assets with that type of liquidity, which is oftentimes not good for the individual, and you could argue may or may not be good for the economy as a whole, both from an inflationary point of view with that sort of added liquidity into the market. And then the third one is, I think, the financial skills and mentalities that it's teaching people. It is very much of a debt-based model, borrowing ahead of earning as opposed to developing assets and then learning how to build wealth off of those assets. And I would say probably the thing that excites me the most about Bitcoin in particular and other digital assets I think will evolve in this space is I believe that it's truly opening up the strategies and tactics of the ultra wealthy to everybody. And what I mean by that is like, you hear of a really low effective tax rates that the ultra wealthy pay. And that's because they're borrowing against their stock portfolios. They're borrowing against their real estate portfolios and not having to have capital gains or selling assets for any of those sort of taxable events. They're getting really efficient borrowing rates on appreciating and valuable assets. And now with digital assets and Bitcoin, everybody can tap into those strategies. Even if you own as little as $10,000 worth of Bitcoin, you can start to learn the mental models, the tools, the techniques, and the strategies to think about how can I really leverage an appreciating asset over a longer period of time to build financial freedom, to build financial wealth in a way that I believe just really hasn't been approachable for a lot of people in the past.
Yeah, no, I completely agree. And this is where the divergence or convergence, I should say, with cryptos and real estate is really happening here. Because let's say I'm an investor and I'm using a DSCR company for purchasing a property, do it for a fix and buy. So buy, renovate, rent, refinance, the BRRRR method, right? And I want to borrow 100%. Well, a lot of these lenders don't want to let you borrow 100%. So you're at say 80 or 90%. Let's say you borrow 90%, you're responsible for the rehab. Well, if you have one Bitcoin and you know your rehab is $35,000, you could basically borrow 30 some percent of your one Bitcoin to use to rehab that property and not have to borrow it again from the DSCR company. Do both, refinance it, pay both back, right? So, I mean, it's a no brainer. So, this is where it's really, I think this is the first stage of it. There are companies out there doing tokenization of real estate. Lofty AI is one of them. I've talked with them. I've had him on the show here as well. The one aspect I don't love about that is I'm technically selling partial ownership, which gives me a taxable event, whereas this gives no taxable event here. When you're borrowing, just like when you borrow real estate, it's non-taxable money income to you. Borrow from Bitcoin, it's non-taxable income to you. So that's where the convergence kind of hits a snag with Lofty.ai. I want to do some stuff with them, but at the same time, I don't want to give up necessarily ownership of that. Now you can work things around it where you could say, well, I'm going to buy it back within 2 years at such and such a price from the people who are borrowing. And then technically it doesn't create a sale, but this is where we need to find out from the IRS and from, just legislation from the government as to what will end up ultimately being, because that makes it difficult there. Now, do you guys pay out for holding like some of these companies out there like BlockFi and Celsius were paying if you gave custody of Bitcoin? Do you guys do that as well? Borrow and lend?
So we do have a couple lend products where we pay a yield. We pay 8 to 10% yield on US dollars or stable coins. So there's a number of people that we're working with that want exposure to the crypto markets, to Bitcoin markets. And so they're attracted by that offering in order to get a higher sort of yield on sort of US dollar accounts that are all backed by then the over collateralized loans. And then the other thing we do have is another lend account for BTC where we pay 3% APY on it. And what's interesting about that, we have a program that we refer to as Salt Shield. And that program is effectively, if people enroll in that for the term of their loan for a fixed fee, we're guaranteeing that they won't be liquidated.
Okay.
And the way that model really works is we have a reserve of Bitcoin, which is made up of our own treasury reserve of Bitcoin, plus people that are basically lending us their Bitcoin in sort of the lend accounts. Then if people do need it to meet margin calls, we're effectively lending the Bitcoin to them to ensure they satisfy that and don't get liquidated. And so that is it's a real attractive program for people that are looking to hold Bitcoin long term, that absolutely don't want any sort of taxable event in terms of any of it being sold, because they may have bought it back sort of in 2015 or before 2020. And so they don't want any of those sort of liabilities from a tax perspective to ever occur. So the Salt Shield then provides their protection. The other thing I sort of referenced earlier in terms of things that we have done and do to protect borrowers' collateral, we also have a technology called stabilization. And that is one where if somebody hits just under 92% LTV, the asset gets converted into a stable coin to ensure that they don't lose any more value in their portfolio. We basically allow them to take a breath to get the account back in good standing and then move the collateral back into sort of the asset of their choice. Again, really working hard. We're trying to build as many features and functions that we can to help protect people, ensure that they don't get liquidated and their Bitcoin stays their Bitcoin for the long term.
Yeah, it's got to be a win-win relationship there. And that's why you guys have been around, right? Because you are working with that and you don't do rehypothecation like you were talking about, like some Celsius and BlockFi and mistakes that they've made. Definitely, I've thought about doing the lending of the Bitcoin as well, or even borrowing against it here. So I'm likely to do that over the next year or so with some different real estate projects and things I have going on. So I'm looking forward to working with you guys on that and talk with you a bit more on that too,
Yeah.
as well. So what other products do you guys lend against? Ethereum? Are there any other cryptos that you guys lend against as well?
So we do lend against Ethereum as well as stablecoins. We're the only lender out there that allows people to have a mixed collateral portfolio. And so we see a lot of customers that will add in other assets to help take out some of the volatility of Bitcoin into Ethereum. So, that is one of the things that if you build up an LTV, that's a mix of Bitcoin and stablecoin as an example, it does soften the price drops, right, in terms of the value of your collateral. And that is an attractive feature that a lot of people take advantage of.
Yeah, here's a question for you, and it might be something you guys are working on. If I don't even know if there's a possibility of this, but maybe down the road there could be that you guys get involved in the real estate lending side with also having Bitcoin as extra collateral against that real estate there. Is that something you guys are looking at potentially going on down the road where you can get into the total DeFi where you're also getting involved in the mortgage side with Bitcoin also as additional collateral as protection?
Yeah, we definitely, yes, real estate for the Bitcoin community, real estate is of great interest because people are buying Bitcoin and holding on to it because of the long-term value, the long-term appreciation. But what we're seeing is that more and more people want to also be able to then leverage it to get income producing assets.
Yeah.
And sort of commercial real estate ends up being a great example for what people can invest in. So we've recently done a deal with a company called Golf Suites. They are building a competitor to Topgolf,
Hmm.
and they are doing sort of real estate backed notes that are paying at a yield, and it's a 5-year note paying out sort of monthly. And what's interesting about that is people are looking to borrow against their Bitcoin, then to buy the note that is sort of real estate backed note, but giving a yield that then covers off their interest payments for the loan that they're taking out to get it. And so really starting to think more strategically about how do I stack these different assets, both to give me more leverage against put my original dollar to work in more than one way, but also generate income so that I potentially can move from labor-based income to asset-based income as my wealth, as my portfolio starts to develop.
Yeah, no doubt about it. And real estate, as you well know, is the most tax advantaged asset on earth. Right now, crypto is not tax advantaged like real estate is. I mean, you could do cost segregation analysis and accelerated depreciation on your real estate to avoid paying federal taxes on other income that you've earned and stuff. So this is where I totally understand why the Bitcoin community is really interested in real estate because of the tax advantages of that too. And it's just you're taxed differently on that passive income than you are on regular old income coming in. So yeah, I'm excited about that convergence there. Are you guys looking at any other cryptos that you would lend against? That is something like Litecoin, which may get its own ETF or ETF soon.
Yeah,
Um,
we always evaluate sort of additional sort of digital assets. It really for us becomes, how big is the market? What's the level of liquidity and stability in terms of the price? And I think longer term, Bitcoin is, I think, leading the way right now where the interest is, where the value, where will drive a lot of the innovation. But I think the fundamental platform about then allowing people to have a broader portfolio of digital assets that they can manage with the same strategies is going to be really exciting. And that will continue to change over time because, to a certain extent, you could start to see that as sort of the digital assets become more tradable, I could have a portfolio of digital assets that represent fine art, that represent real estate, all within one portfolio that I can then further leverage based on sort of my own sort of profiles and goals to do other things and find that right balance in terms of both appreciating assets as well as income generating assets.
Yeah, and that is, I mean, that really is the future. Where you just said right there, you can get in these coins that are going to be focused on certain different things, and it balances out your portfolio. It's kind of like having a regular old stock portfolio where you're trying to balance out, the S&P with the Dow, all these, and the Nasdaq. So all these different types of stocks that are in different sectors and stuff. The crypto market obviously more goes along with the Nasdaq since they're both tech based for the most part there. I do think we'll start to see a convergence with crypto, and crypto will become way more stabilizing over the next decade or so. Now that we are getting some kind of legislation done and stable coins, I think that new act that was just passed through Congress here with stable coins is going to be a kind of lightning rod to start that whole process here and help stabilize the market where the crypto market may end up trading down the road more like the stock market where you have a lot less volatility, right? But there are so many coins out there. There needs to be that consolidation of coins. It kind of reminds me, tell me if you think it's a good parallel here, but in the 1990s, all these dot coms coming out of them, and then most of them failed. Probably about 90% of them failed and the good ones stayed. I think we'll see that a lot of that same consolidation here in blockchain and the crypto space over the next decade or so.
Yeah, and I think so. And I think another way to sort of, look at it is like there'll always be penny stocks for sort of higher quality, stocks that are traded within sort of the NASDAQ and the different markets. And I think, you'll start to look at a lot of digital assets in the same way. They will get vetted, they'll be put into different classes. And if people want to make bets and to invest in different classes of the digital assets, they can, but they will start to be better sorted and not all viewed under the same umbrella in terms of the quality and the potential.
Yeah. I mean, you got the meme coins, right? That's a big class in and of itself. It's so volatile. You can really do well with it, but also at the same time, you can lose everything with the meme coins. But some of them actually have some use cases. One simple one that was started out as just a funny joke about a year ago was called Fart Coin. And then they started doing smart contracts on their platform. They wanted to make it multi-purpose where you could do multi-purpose things on. I think that's pretty smart. Gives them a little staying power. Plus they got a funny name. But there's
Yeah,
so many coins that thing.
and I mean, I think a lot of those things just in the early days of the internet that people are just having fun with the technology and it's bringing attention to the technology, and trying out different use cases, and it will sort of stabilize out. And as you referenced earlier, as banks start to come in and more institutional money starts to come in, there will be sort of more investment, and a lot of this will start to sort of play out. I do believe that banks are going to think it's going to be harder for banks to really gain market share than what I think a lot of people think. For me, that comes down to having lived it with Salt and advised in other companies, like the multi-currency accounting and risk management and policy management within sort of a financial institution is hard, especially if you come from a TradFi model. Like it's going to be really hard for the accounting teams to adjust to think about things in both Bitcoin as US dollars. The risk management teams are going to have a hard time in terms of how do I sort of really evaluate these financial decisions? What is the risk factor? And I just think you're going to see traditional banks adopt stablecoin more quickly. That will be easier to manage. And, we suspect they will look to partner with more third-party companies such as Salts of the world to then make the services available to their customer base, but not necessarily be able to jump into it with both feet. And in addition, just the Bitcoin community and the digital asset community is a different community that philosophically are not necessarily aligned with traditional banks. And so banks may not understand how to provide the right level of customer support, provide the right level of messaging and sort of communications, which will be a gap that will close over time, or the traditional banks may lose out. I mean, I think there'll still be a lot to play for in terms of how all of those relationships and commercial organizations sort of fall out over the next sort of 5, 10+ years.
Yeah, I'm really curious that too. And I have different theories on where the banking system's headed. I think as soon as the baby boomer generation is fully gone, I know that the millennials, Gen X like us, we're probably the crossover between everything
Yeah.
for sure. And then you got Gen Z, my kids, they want nothing to do with banks. So if it's all DeFi and all companies like Salt, they're totally fine with that, doing everything online. They do most of their stuff on Venmo anyway, and those, Apple iPay, those things. So I think the banking system is going to really lose a lot to companies like Salt Lending and a bunch of other ones out there for sure.
I think that's a really interesting point. I mean, there is this, we're at this real sort of precipice of sort of the changing allocation of where value is invested. To your point, like the students I teach, my kids, there's a whole, the generation right after us was digital from the start, right?
Right.
They're sort of digital natives. They think about money as being digital, and therefore, even without understanding Bitcoin and a lot of the technologies, they're like, yeah, money should be digital. And we're going forward, and that's a really different mindset. And so as we start to see the transfer of generational wealth go from one generation to another, I suspect it will start to change form
Yes.
in terms of where it's invested, and that will then have implications in terms of who's holding it, who's advising on it, what it's being invested in, and reshape, you could say, the banking as well as the wealth management and investment management industries aligned with the attitudes and preferences of sort of the younger generations.
100%. So we just inherited, my wife and I just inherited some money when her father passed away last year. And we're a prime example of that. Where traditionally, we always had it with a money manager there and they earn their 1% or whatever they earn of it every year for managing your money. We have moved some of that into Bitcoin and other cryptos so that's already starting, like you're saying, that transfer of wealth and what we're doing. And we're only Gen X. Millennials will do more. Gen Z, I mean, I don't think they're going to want much of anything to do with the traditional way that finance was done. They're going to want to be able to do it and look at things that I think are going to get a lot easier you could probably have AI manage your stock portfolio just as good as any person out there, right? It's all throwing darts at the board. Right, just diversification, I think, is the key. But I think it's really changing that way. And I really see companies like yours and a lot of other DeFi companies out there really exploding over the next 10 years or so.
Well, and I agree. I think AIs can be a great tool, and people will also take a look at why do you have an investment manager, and it and because if you go back and you look over, sort of over history, right? The big decision is what asset class you're putting your value into, and what is the distribution across those asset classes. And I agree with you. There's going to be AI tools that are going to really help people probably be more introspective about what your goals are, what your time horizon is, and what you want to achieve, but also help you understand what the risks are. Because I believe that's, for the most part, at least when I've thought about hiring a money manager and an investment advisor, it's like I'm covering my ass to make sure I don't make a fatal mistake. And if there's other ways to do that going forward, then that's great.
Yes.
I do think we are in probably a time period of 10 to 20 years of the transition where there still will be a lot of custody type models to help people find where they are in that spectrum in terms of being fully self-sovereign, or where do I want a little bit of help, and that help will start to change. But I think that there's a lot to play for in that space because, people like to have help going through these bigger decisions. And some people go online and they get the help through communities. Other people go through in terms of working with companies or working with then individuals. I think a lot of that will continue to be there will be elements of that as we go forward, but it will start to change.
Yeah, I'll be curious right now. I'm very curious as to how they're going to change this financial system. They all want to go to the digital currencies, all the world governments and everything out there. Is there going to be some sort of event that happens that allows them to easily transfer from what you call the traditional financial system to this new digital blockchain based financial system? I have theories on that. I do think they'll have some kind of contrived crisis where they'll do that and kind of force us into it, and they'll give us incentives. 'Cause look, they would love to track every single thing we do, and they could definitely do that with if they had the Fed dollar, right, or the U.S. digital dollar. They can literally track, penalize you. Probably not a great thing for most of us that are in the crypto space. We like it because we like decentralization. We want autonomy. We don't want them knowing everything that we're doing all the time. But it does give great advantages that compared to the traditional financial system we have here. So if you look at it introspectively, looking at it, there's probably more advantages than disadvantages, but it does also give the government more control over you.
No, I
Unfortunately,
mean, I think we are definitely going to get into an age where the data, I mean, we have been in sort of the last couple decades, the value of data has been immense, and it has funded a lot of the business models, like Facebook, et cetera, where they were giving away free services because of the data they were able to collect. The data going forward, especially with blockchain and digital assets, gets even more granular in many respects, and also important in terms of how we think about the data going into AI models, both from a training perspective and then a use perspective. And so there is a lot to play out there in terms of where privacy falls out, what should be sort of anonymous, but sort of be known from a use so that there can be analysis done on it. But where, as individual citizens, what rights do we have for anonymity, for privacy, of our own data and control of that, both financial and non-financial?
yeah, no, I agree. You go to real estate onto the protection, the financial protections here. If deeds were recorded on a blockchain, it would be a lot harder to commit fraud, right? So I think that's where we need to go. Voting was done on a blockchain. It would be virtually impossible to have fraud, which is why they probably don't want voting on a blockchain. And all likely,
There's some use cases that make complete sense, and they're probably being slow on with intention.
so true. But I am very much looking forward to. I mean, because you look at it, if you do deed recording through the blockchain, you reduce the need for title insurance and title companies. I mean, you still have title companies, still got to record it potentially, right? But a whole different use case. It might take away some industries, but add new industries. Whenever we get into new technologies, right? Whenever you look at these in the history, everybody thought when the automobile came out that would get rid of a whole bunch of different jobs, right? When banks, TM, money access centers, remember we used to call them Mac machines when we were younger?
Yeah.
The ATM machines came that it would do away with all bank teller stuff. And the only thing it does is it creates other jobs. Technology does create other jobs because somebody needs to fill that ATM machine. Somebody needs a program and somebody needs to create equipment for it. So there's a lot of different opportunities coming up, and even AI, which will eat up different jobs. It'll eat up more task oriented jobs, but it's going to give so many business opportunities, I think, in the future in AI. I'm excited about that.
No, I agree. I think it's, to the earlier point, it's going to give us more information to make better decisions. It's a question of what are we going to do with those decisions in terms of taking action. I think it gets rid of a lot of the softer services that we're providing in terms of analysis and strategy and recommendation, but you still are going to want that advisor who has a deep level of expertise to walk you through the detail that an AI might be able to tell you. And so I think there's still going to be an interface, but I think it will clearly change.
Yeah, no, absolutely. So I'm a little jealous of you because you're out there in Colorado, or out there in beautiful Boulder where you teach also as a professor there as well on blockchain technology. So you've been doing that since 2017, right? What are you seeing with the students with curriculum in college? How much more is being taught in blockchain, digital assets? Do you see is it becoming a major, or is it kind of one of the things where it's just a class on it?
It is, the different universities are starting to pick up more. I mean, and I would say it's ebbed and flowed with sort of the market interest, right? A lot of the activity has originated out of student clubs and clubs where students were trying to learn how to invest in digital assets, invest in Bitcoin, learn more about blockchain. Blockchain is an interesting one. I still really believe in the core technology. It has yet to really find the sort of the use case and the economics
Yeah.
to make it work at a larger scale. Both still struggling, I think, with sort of the idea about sort of a centralized versus decentralized sort of blockchains and what that means and philosophically
Mhm.
what is going to go on it. But you're seeing more and more people start to record stuff. I think with the AI models that it will become a more critical technology because of the ability to provide access to personal data without sort of knowing who it is and to compensate people for it. And that becomes really a lot easier to do systematically with the blockchain and smart contracts,
Yeah.
at scale, but still that has to play out. But going back for the students, there's definitely heightened level of interest. But, I think as with education in general, there is just such a continuing growing and wealth of information that's available online and from
Yes.
really great resources out there that I think, people are, I'm trying to teach students to how to be better systems thinkers and better problem solvers
Mhm.
just because then go use the tools that are now available. So I think, how we're trying to educate sort of the younger generations and people that want to get retooled within sort of this current environment. For me, it's about learning to sort of figure out what questions to ask, how to go collect data, and then how to make decisions based on the data you get. But you just have to get over taking action. You have to get over the hurdle of not taking action or the fear that might be holding you back
Mhm.
because there's so much that's out there that if you're willing to do it, you can go start to get the data, you can get the learning, and you can start to find people that will help you with the support to work your way through to the goal that you want.
No doubt about it. I use YouTube University for almost everything.
Yeah.
If you want to fix I got my 2015 Ford Expedition, King Ranch Big Sucker, and if something goes wrong, I can just type it in there, boom, figure it out. There's about 12 videos there showing me how to fix that particular problem, right? So it's great. I mean, like I said, it's about problem solving. Our educational system to me has been so bad for so many years because we just teach people how to memorize and then for a test and forget it, not how to think, how to problem solve. I think that's why we've fallen behind other countries and stuff because they try to teach more to creatively think, figure out problems, solutions, how to find out problems as solutions. So you got the right way there. That's how you teach.
Well, and I also think we're going to see an increase of coming back with sort of the trade skills
Yes.
because as we were talking earlier, I think a lot of the sort of white collar analyst roles are going to sort of at least be condensed with AI. And one of the things I'm seeing is a lot more startups sort of moving towards things that are analog in nature. They are sort of people based and from a relationship perspective or engagement, and it's sort of manufacturing oriented in terms of the product. As there is a bit of a swing away from digital, yes, you want businesses that are sort of cost efficient and smart because of AI, but starting to have a real tangible output. So your example you just brought up, I had a group of guys that I was advising the other semester, and they came up with this concept of next gen garage. And it was basically building a physical space to help people learn how to work on cars, work on older cars, refurbish them. But it's just been this great business model of pulling together a digital community. They have a physical space where they're having meetups. They're recording videos about how to work on old Scouts and old sort of Broncos and things of that nature, which go out and educates a lot of people. But there's also a lot of people that want that in-person interaction and learning the actual skills. And, I think as we talked a little bit earlier about there being this generational transfer of wealth, there's potentially a generational loss of skills
Yes.
around woodworking, around sort of craftsman things that have
Mhm.
really that have a lot of craftsmanship with it,
Mhm.
that I think it seems like there's a younger generation are starting to maybe get interest in it. It bridges our generation
Yeah.
about then figuring out how to connect the two. One, so that people have sort of fulfillment, especially in the age of AI, but also some of these crafts are not lost.
Percent. So it is so true. And I have three boys, 22, 20, and 18. I got my middle son to go to HVAC school. He did. He went there for a year. He's been working for a year now doing HVAC, and now he's working on getting his contractor's license so he can officially create his own HVAC business. But we already know how to use these apps. He can use these apps that a lot of them are AI based apps, right? So when he plugs into a system, he can kind of see what's likely going on with the system. So that's where you talk about the interaction in between. So you still need that person to decipher that you still need a person to interact with customer. It can't just be an AI robot. They're not there yet. I mean, we have this transition going on, and luckily for me, I was able. What paid for me through college to graduate was working for my uncle, who was a general contractor from junior high all the way through college, and I learned all these trades, and these trades are super important. Allowed me to fix a lot of things in my house for nothing. Could literally do anything I've learned from it. And we've gotten away over the last 100 years. It used to be when you went into the trades that was respected and looked at, right? If you were going to be a plumber, electrician, builder, any of those things. Since the advent of the universities, it kind of went away and they kind of frowned upon the blue collar people. But now I think we're swinging back where we realize, hey, there's such a shortage of blue collar people. We need electricians, we need plumbers, we need builders, we need more of these people. And that's why we're importing so many from Southern countries, right? So this is becoming more and more important. And that together with AI is just going to make everything quicker, better, more efficient. And yeah, I'm looking forward to the direction we're heading in a lot of different ways that way.
Yeah. No, it's exciting.
It is very exciting. Well, Hunter, thank you so much for your time. We're pulling up on 52 minutes here. We've had this conversation. I could go on for more hours on with you in the future for sure. And I'm probably going to bring you back on and talk more about some different things, especially as you guys offer new products and have new things going on. We'll definitely keep in touch. I'll get your number after we're done recording here. We'll keep in connection and we'll definitely talk further. Is there a good way for people to reach out to you if they want to connect with you for Salt Lending or find out more about Salt Lending or a website?
Yeah, if people are interested in learning more about Bitcoin or sort of just digital assets in general, would love to connect on LinkedIn and X are sort of the two main platforms I'm on. And if you want to learn more about Salt Lending, go to saltlending.com. We've got loads of resources there that talk about Bitcoin, borrowing against your Bitcoin and other digital assets to help you make a good choice.
Beautiful. And Hunter, I'll get all your info after this and I'll put it all in the show notes and this will be put on YouTube as well here. Thank you again for your time.
And pleasure, Paul.
Thank you very, very much. And we'll catch everybody in the next episode.